The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Marty in Worcester, Mass. Hey, Marty, what's going on?
Hi, Mr. O'Brien. Got a quick little thing here.
Yeah?
It's called patience and perseverance.
Okay.
Patience. I heard a goddess yelling, the magic silent word, and methinks I must be smelling pokey money round the world. Perseverance. When markets roil like stormy seas, good traders seek safe port. In financial times like these, you need Tom O'Brien's gold report.
You are too much, Marty, man. That is so cool. Well, listen, man, I really appreciate that.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. This quote's by Robert Brodt. Remember that there is a part of life for which you are the explanation. That's a beautiful thing. Market-wise, let's take a look at it out here. We have the Dow Industrials up 16, Nasdaq up 18, S&P's up 4.5, gold contract up $4.60, traded $1,211 an ounce. Silver up 9 cents at $17.16. Platinum up $7.60 at $1,158 an ounce. Copper down a penny and a half at $2.84 a pound. Light sweet crude up 92 cents, trading at $58.91 a barrel. Bonds, we have the 10-year up 7 ticks, 127.08. 30-year down 12 at 152.20. And King Dollar up 62 ticks, trading at 95.42. You get the euro down 20 at 111. And the yen is up 40 at 121.09. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at it. What do you have? You get a market, folks, that just hanging at the highs. That's the bottom line. You don't have any juice. When the Fed minutes come out today, bottom line, a non-event. They're not going to go up on interest rates. June, I suspect they're not going to even go up in September. We're at 213.42. Bottom line is that the S&P has to get back inside 212.24 to go lower. And that's where it stands right now. There's no juice up here, but guess what? There's no juice on the way down either. That's your S&P. Now, the underlying the S&P, though, you have a lot of weakness. There's no two ways about it. You get a lot of big, large cap stocks that have already gone south. The NDX 100, what do we have? Let's take a look at the 3 Qs. 3 Qs, price move out here, you're at 110.39. The high is 111.16. We've hit 110.67. You know what? This thing can hit the high. You're coming into Memorial Day weekend, folks, and I don't expect what we're going to roll over before that. The reason being is that this is the first start of summer for everyone in the Northeast or the West, Midwest, where, basically you've been having a bad winter. Thursday, tomorrow, you'll have a lot of folks leaving the trading desk at noon, and they won't even work Friday. So I suspect it's just going to be hanging at these highs. The IWM, what do we have with the IWM? Bottom line is with the IWM, you're trading out at 125.28. Light volume, 15 million shares, but more than likely they'll try to jam this up into the 126.91 area. Gold contract, what do we have with gold? Let's take a look at gold. Gold is a beautiful thing, folks. Gold continues to perform. And when I say continues to perform, what you have is this. Yesterday, you got into lower price. You had volume of 179,000 contracts. Let me put this in. Let's see. Put this on a daily for you. Okay, so yesterday we had 179,000 contracts. That was going into 242,000 contracts. What gold also did, folks, you never got to the lowest swing point. The swing point there was the 1190.40. We got down to 1205.10. Now, what do we do today? You went to a lower low. You went to 1202.70. rejected that price. Bottom line, gold wants higher price. Gold wants about $12.60. That's the next move that we're looking at in gold. We take a look at the silver market. Same setup in the silver market. In fact, you know, silver is it's 3 times as volatile as gold. You know, when you're talking about moves up and or down, bottom line, just about 3 times as volatile. Well, silver did is this. Silver didn't even get close to the bottom of the strength. From the day of strength we're talking about is May 13th. So silver yesterday, get this out of the way. There we go. Silver yesterday went from a price point of $17.73 down to $16.87. It did that on 59,000 contracts. It was going into 77,000. Bottom line, silver is going to make the highs of January more than likely before gold does. The highs of January we're talking about in silver is $18.50. So there's some real action in the metals market. King dollar. Let's go right over to King dollar, because this is what you have a King dollar. The only movement out here today, folks, is King dollar. And if you want to be looking at where you can glean the information out of the marketplace, King dollar is the one today. And King dollar has done a counter trend bounce. You know, the second leg down in King dollar goes like this. We started the second leg down on April 13th. We're at 100.27. It went straight down with volume to 93.17. The last 3 days you bounced. Guess what? Now this is so cool. It's insane. What equity markets, futures markets, currency markets love to do, and we're talking a downdraft now, but even on an updraft, they like to go back to the last time that you had any volume, period. So what does it do? It goes right into the 29th. The 29th of April, folks, that's where we had the most volume on the way down. We had 102,000 contracts. The high of that day is 96.29. The low is 94.25. We got up there today to 95.93. We're at 95.40. This, to me, is a monster ABC down. And your A point on this is the 100.27. Your B point is the 93, so you got $7. Your C point is today. You're talking about 95, 93, and what do you set up? The thing was so wild. You're setting up an 88. And an 88 just totally makes sense, even just looking at the chart, because the next level of floor or support is $88. And what does that say for the marketplace? The market, folks, can't stand a weak dollar anymore. It's just absolutely wild how this whole thing shakes out. Now, let's go over to the airlines. If you want to see something, you know, I've talked about the October 15th swing low, who knows how many times, okay? Because what we have seen is that we've seen sector after sector, equity after equity, one sector at a time getting picked apart. And where do they go? They go to the October 15th swing low. Now, when you look at the October 15th swing low in the S&P is at 2131 right now. The high of that low is 1912. The low is actually 1820. The most bizarre part about it, and this is where it really gets wild, is this. The equities themselves, folks, okay, are so far away from the lows of October 15th, it is not only dangerous. When you see what I'm talking about, I mean, it's insane. If we take a look at the airlines. Now, the airlines, check this out, the airlines were one of the strongest sectors in the marketplace. The airlines, if we take a look at these charts and see how this was set up, watch this. We'll put this on, first I want to put this on a weekly. And what you're going to see is that these airlines on the way up were just beautiful. No two ways about it, okay? Straight line move. We started out in 2012 at $18 if we're looking at United, $18. You go all the way up to $74. Now, when you take a look at that, what you're going to see, this is just like the marketplace too, what you're going to see is that in September we hit $52. We have a high volume low. This is the October 15th high volume low. That thing's sticking out like a sore thumb. The high of that low is $45. The low is $39. United Continental goes all the way up to 74 and then just rips apart. I mean, every one of these airlines today are getting taken to the cleaners like extraordinaire, folks. If I bring this back, I'm going to put this on a daily for you. They're monster ABC Downs, by the way. That's what they are. And it's volumes blowing out of them beyond belief. If we take a look at United out here today, United Airlines, I can pick any one of them. It doesn't matter. United's done 17 million shares, taken out the swing point that had 4 million shares. I mean, it's just unbelievable. There's just not enough room to get out of the door. That October 15th swing low, guess what? That's where we're going. This is Tom O'Brien. This is TFNN. Dow Industrials are down 18. NASDAQ up 7. S&P's out there are flat. Gold up 440. Silver up 8 cents. I'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tom Tom takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. You have the Dow right now down 38. NASDAQ is off 2. S&Ps are off 2.5. And if we go back to this October 15th swing point, folks, do yourself a favor. Just find the equities you have. If it's a high volume low on the October 15th swing point, put a stop in, like right now, okay? You can look at each and every one of these airlines. They're going there. And it's sector by sector by sector. That's how this thing always shakes out. So it's pretty intense. There's no two ways about that. We take a look at, there's so much, today, there's so much information about so many investigations, so many banks, so many broker-dealers, man, all going south. It's like insane. So this one here, UBS won immunity from criminal fraud charges in the Justice Department investigation into the misconduct in the trading of precious metals. Do you even know, it's amazing how they even write these up. Misconduct, right? Oh, really? How about fraud? How about ripoff? How about stealing? The Swiss bank's main UBS AG unit won't be charged by the department's criminal division for information the firm disclosed to prosecutors about precious metals transactions, according to the company's plea agreement released on Wednesday to resolve a probe into the interest rate manipulation. Now, what's going on is that you had 5 separate banks today plead guilty, criminal, to manipulating currencies. What happened, if you think the SEC is going to protect you folks, you're dreaming. The SEC turned around and protected the bank, gave them waivers. They can plead guilty. Guess what? It's not going to mean a thing. You had Barclays, JP Morgan Chase, Deutsche Bank. Now, this is a separate investigation. And what this one is about is manipulating the prices in gold and silver. This has been hanging out here for years, folks, okay? Bottom line is that it seems like one by one the investigations are following. Why? Because the rats are jumping off the ship. That's what it comes down to. The Justice Department, okay, so let's see. The scrutiny follows international probes into the rigging of financial benchmarks for rates and currencies, which have yielded billions of dollars in fines. Imagine how much people have lost, though. Forget the fines. The Justice Department on Wednesday announced JP Morgan, Barclays, Citigroup, Royal Bank of Scotland agreed to plead guilty to conspiring to manipulate the price of U.S. dollars and euros. In its deal, UBS promised to help investigators examine whether there was manipulation of and fraud in the precious metals markets. The 4 other banks' agreements filed in the federal case in Connecticut don't detail cooperation by them in the metals case. So what you have is that you get UBS is going to rat the rest of the banks out on manipulating gold and silver. UBS spokesman Karina Brine declined to comment beyond the statement that the company issued. Bottom line is that HBS Holdings disclosed in February that the Justice Department and the U.S. commodities regulators had sought documents on precious metal dealings. The London-based bank, which is under a 5-year deferred prosecution agreement with the Justice Department for money laundering, said it's cooperating. This thing has gone so far off the deep end, folks, that we've been talking, for years that, this is part of doing business. But it's like, my God, where's this going to go? You're talking about absolutely RICO type of organized crime inside the banks when you really put this all together. It's like insane. It's absolutely insane. Bottom line, we not only, I think, know where it's going to go, that's nowhere. That's big fines, because what you have out here today, it really says it all, that you have the Justice Department, they've ripped everyone off. That's the bottom line. They pled guilty to it. The SEC, simultaneously, they voted last night to give them all waivers. So the way this works, if you are a felon, there's no way you can be a bank. You can't sell securities by being a felon unless you get a waiver from the SEC. Bottom line, they charged them, the feds charged them, the SEC gave them the waiver. The next deal for these, and they won't fight this, but they'll throw a lot of soft money into it. The only risk that the banks have right now is that the Labor Department is in charge of who can move retirement money. So they're going to have to go to the Labor Department and try to get another waiver, and we'll see how much money they throw at the Labor Department, for that. Bottom line is that pretty intense. We take a look at the Fed minutes today, with the Fed minutes bottom line saying, guess what? They're doing nothing. Federal officials last month didn't expect to raise rates at the next meeting in June. These are the minutes that are coming out. They come out at 2 o'clock today. Many of the participants thought it was unlikely that the data available in June would provide sufficient confirmation that the conditions for raising the target range for the federal funds had been satisfied, according to the minutes of the April 28th and 29th Federal Open Meeting. So what you have is this. There's no meeting in May. We have the meeting in June. They just told us the meeting in June they're not going to raise rates. That's what these minutes are saying. What does that put it off to? I suspect what you really where you're at right now is that you are all the way out until September. The 10-year rate right now is running at 2.25. If we go over, we just take a look at the TLT first. What you're going to see is this. The market itself looks to me that it's going to raise the rates. The TLT is at 118.84. It's building cause to get to lower price. That's how this thing is setting up. The 10-year, the 30-year, they both are building cause to get to lower price. The 10-year today is down 1.1 million contracts. The high volume swing low out there is 2.1 million contracts. The thing that's going to be pretty amazing is watching how this shakes out, because fundamentally you would think that as rates go up, and even the market-based rates, meaning that what you absolutely have is that traders are selling more bonds than they're buying. So that raises rates no matter what the Fed would do. Now, with that happening, you'd think that, okay, simultaneously the dollar should be going higher. What I think is happening is this, is that as the stock market itself is freaking because the bond market is selling off. As the bond market sells off, what ends up happening? The stock market sells off. As that happens, what ends up happening? You need less dollars all around. You need less dollars to buy bonds. You need less dollars everywhere to buy U.S. stocks. And simultaneously, what you end up having happen is that if you have international investors, they're taking that money and converting it back. So, because, well, hey, there's both sides of it. We'll see where this whole thing ends up shaking out. But the way that is set up right now, that's what seems to be happening. The correlation absolutely has changed, and it changed about 4 or 5 months ago. Airlines, oh man, it's just every single one of them. You talk about going in unison. They just can't get out the door fast enough, and there's no doubt. Now this is a time that you talk about a forward-looking indicator. It absolutely blows my mind, because if you have been on a plane, you know that every single plane is full to the hilt. I mean, they got you in there like cattle right now. They've got more seats in there, I do appreciate all the guests, my guest hosts doing the programming, because the last couple of weeks I've been on the, plane on quite a few times. I'm back for good right now, which is great. But bottom line, you talk about squeezed in, forget it, man. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back. Dow Industrials right now are down 14. Nasdaq's up 5. S&P's are flat. We're going to be right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they've just released the second running of their 5-year Market Safe Futures Economy CD. This is a CD that could really deliver, but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. After the bell out here today, it's going to get interesting because you get NTAP. We have Salesforce, Synopsys, Williams-Sonoma, coming out with some numbers, and you know, when the Fed announcement come out, it was absolutely a non-event. There's no two ways about that. And what isn't a non-event, of course, is that if you were in the transportation stocks, because those, if I watch this, if I'm going to bring up that Dow Jones Transportation Index, it'll kind of blow your mind here. So this little baby, you talk about on the way down. This is pretty amazing. Actually, let's bring this up because this very well may be closer. Oh, it is. Wow. Okay, so check this out. We bring this up. I'm going to put this on a weekly basis. Yeah, put it on a weekly. Okay. Right now, we're at 85.14. The high is 93. 93 was established November of 2014. The high volume low, the high volume high of the October 15th low is 81.64. We're almost there. This is not just a telling tale, folks. What you have with is this. We're down $1.60 today. How we go into that is going to be crucial to really wrap your head around. This is why. If you go to the bottom of it and break it, that is saying that, guess what? We're not only going lower, we're going a lot lower. That's the first part. Second part, on a bullish expectation, is that if you go into that and you can't break it, you'll bounce around, and then it's like, okay. Then what you could do is that you could look at the other positions that you have in the marketplace, see how far it is down, see if you want to take that heat. We'll see where this baby shakes out, but it is coming down, and it's coming down. What it has done on a daily, I believe it's going to be an ABC down. I mean, they're killing this thing right now. So on a daily, what we have is this. Yeah, it's an ABC down. So it's been building cause for this ABC down since March 15th. Your A point on this is 91.76. Your B is 86.25. So that's not that bad, actually. That's 5. It's 550 down out of 89. 89.5. So that's 84.50. And right now, we're at 85.10. That's the first part. Let's bring this back further because I'm going to show you something here. I think this is... Yeah, you get a total breakdown, though. What you have is this. So the first leg down is 8,400. Hey, we'll see. We can hang. It can hang at 8,400. That's the way this is set up. What you can do on a price projection, which I do quite a bit, meaning when you consolidate for so long, and this right here started the consolidation in October of 2014, and of course we're at, June of 2015. When you break that huge consolidation, a price projection you can do, it goes like this. You take the bottom of the consolidation, which in this case was 8,500. You take the top of the consolidation, which is 92, and that's 700. I'm ballparking it, but you can take the 80. You can take 700 away from the 8,500, and bottom line, what do you end up with? You end up with the 7,800 down at the October 15th swing low. So, when you do different price projections like that, what I always like to do is do the price projections prior to really get an understanding where I think they want to go. Now, in this case, we know that the October 15th swing low is hanging out like a sore thumb. But bottom line is that is saying, guess what? That's where it wants to go. Our man, Mr. Dave White, just put up a couple things. We were talking about the banks and, what they basically were doing inside the currency market. One of the quotes, in one instance, the manager told the staff that their aim was to give customers. Now, this was from Barclays. In one instance, a manager told the staff that their aim was to give customers the worst deal they could get away with. Another had a remarkable rallying cry: "If you ain't cheating, you're not trying." That's a quote from the Barclays traders. I mean, it's pretty sick. It's cemented in the business right now. So if you have anyway, it's sad. It's really sad. Some of the Dow stocks. Let's take a look at some of the Dow stocks out here. Marbell's up 24 cents. You have ExxonMobil up 9. Big Blue is up 26. We have 3M down 95. Walmart is down 52. Let's go over to Walmart. When I wasn't here yesterday, Walmart started getting hammered. Now, Walmart's going to be, no doubt, a canary in the coal mine, and this is why. Walmart had broken out of a 12-year consolidation. That breakout was a nice breakout. There's no two ways about it. You know, it broke topside from like $70, went up to 95. Put this back on a longer basis. And so when we went topside, we went all the way up to $90.97, right? Well, this will just blow your mind, okay? Because guess where it is right now? The high of the October 15th low in Walmart is $78.63. Well, it just sliced and diced that yesterday like nothing. It didn't even budge, okay? Just ripped it apart. Now, what that means is that means now you're going to go to the bottom and go test the lows. The low is 72.61, and we're already at 75. But you know what we also have with Walmart? It is a monster ABC down. You take the top of Walmart, the high, $90.97. 77 is the B, 13 bucks. Your C is 80. That's going to give you 67. That's where that baby wants to go. 67 bucks, forget it, man. 67 bucks bringing you all the way back to 2012. You know, so what does that do? That is going to beget more selling. And now when you bring this back, see, once these things start, folks, you know, the whole downdraft has already started. The indices are at highs, but this has already started. People are going to get their portfolios, their statements, and they're going to say, how am I down money when the S&P is at highs? Because what you're going to see here is this. If we go back to the, man, this is going to be pretty wild if, in fact, Walmart ends up breaking. Here, watch this. If I bring this all the way back, this is really dangerous. We put this on a weekly for a second. It's actually a mind blower. If you put this on a weekly, what you're going to see is that when we broke out, you know, the breakout area on Walmart was the 7. It wasn't. Well, there's a couple different breakouts. 012. Okay, so it did two legs up after the breakout. This breakout here, the top of the breakout was 81, so that's already going to fail. So that's it's going down to 67. And what that does is it gets everyone back from June of 2012 in a losing position. And we'll see whether we settle out at the original area, which is $54. So this is going to be really bizarre watching this shake out. It looks to me like we got 60 bucks on the agenda. So $60 in Walmart would be a 33% correction coming off those highs. And that is one big number. One of the targets we want to look at Valley, V-A-L-E. Valley right now is trading out at a price point of $660. This little baby has come right back into its strength. It's done it with lighter volume. Valley, folks, is the largest producer of iron ore in the world. And what you have is that the last streak up was a nice little streak, ran topside. You know, we went from a price point of $586 up to $914 very quickly, meaning in about 7-10 trading days. You're pulling back now, and you're pulling back with lighter volume. And what you can expect is this. You cannot expect another run as quick as we did the first one. I've seen this happen a lot, meaning we actually got the first run in the gold report, sold it, nice profit, bought it back 2 days ago. You can't expect you're going to get the same run that quick. Normally what ends up happening is this. Because this run was so quick, there's plenty of people that didn't sell. We sold, took our money, had a field day, right? Buy back in, we'll be patient. Most of the time what you have now, this downdraft, all those people that didn't sell say, okay, I'll take my money back now. So you got to build some cause sideways first before it's going to make another run for that 914. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrials are down 22. Nasdaq's up 3. S&P's are flat. Gold's up 320. King Dollar up 262. You get the bonds 10 years up 6. 30 years down 12. We're going to be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Dow's down 15, Nasdaq says flat, S&Ps are off a quarter of a point. And, the high volumes out here, meaning the stocks, once again, that, so you have a market that's flat. But yet, you have these equities that are down big. It just never stops. That's the bottom line. Today, mostly it's the air. You have United, Bluebird Bio is down 3.2. You get QIHU down 8%. Sprint is off. Spirit Airlines rather is off 6.6. American is off 8.9. Southwest is off 8.8. Let's go to Lowe's Department. Lowe's. Okay, so Lowe's, you get the builder supplier, LOW. Lowe's come in with numbers. Numbers didn't meet the estimates. We take a look at Lowe's. What you have is that this is the classic too. So check this out. You a couple of different things with Lowe's, right? The April 30th. So the high on Lowe's, folks, is $76. We're at 68. Lowe's had already come off the high and printed a high volume low at 67.60. That was printed on May 1st. Lowe's then goes from the price point of 67, goes back up to 73, and what does it do today? Numbers come out. Numbers didn't make their numbers. That's the bottom line. Come out. It goes right after that, the high volume low. Now, Lowe's was on a one-way trip, as many of the stocks in the equity market itself was. Lowe's was a rocket ship that went from $45 to $75 nonstop. That's just what I expect you're going to see now is this. You're coming down into the high volume swing low with volume. So the volume's expanded. So it looks to me like 67 is going to get hit. Going to get hit and going to get whacked. That lays up 63 to 57, but more than likely, guess what? It's going to probably lay up 53, and when we bring this back and you put this on a much longer basis, this is the first correction. Well, actually, no. You know what we're going to see? This finished a ABC structure on the way up in an extraordinary way. That's what this did. This is going to be a vicious pullback, though. This is intense. And okay, so these are the legs that we did in Lowe's. You went from 24, August of 2012, 24 to 52. Then you consolidated for 8 months. Then you went from 45 to 76. Yeah, so that you did a full ABC structure on the way up. When you do that, you got to expect a pullback. Now, this one to me though also looks like it's going to be a vicious pullback. So it's like, that's a heads up in itself. And more than likely, what that is too, by the way, is that the housing market, right? Not only has come back, but it's come back with a vengeance, right? When you come back like we have come back, now you read everywhere, housing's on fire, and it is. There's no two ways about it. But what you have is this. So picture this. We've had the fund for 2.5 years, right? The amount of do-overs is extraordinary. But what you also have happening is that when you multiply that by many times, what you have a lot of these houses that had been neglected for such a long period of time are already done over. And I can tell you from the newer houses that we're even getting, they're not, you don't need as much work as the ones we were getting 2 years ago. Now you're paying more for them, but that comes into the play. Why does it come into the play? Because you're not buying as much product to put into all of the houses. So it's really wild. When I saw that come out this morning, I said, oh, this is interesting how this works. Because what does happen is that the longer that you had the downdraft, the longer that these places wrecked, well, of course, more money had to be put into it, but you're starting at a lower base versus where I suspect we are right now, particularly at different parts of the country. At different parts of the country, what you absolutely have is that, they're not full gut jobs, they're paint jobs, there's just less money being spent. So, with less money being spent, guess what? They're going to make less money. Let's go over and take a look at Home Depot simultaneously. So if we take a look at Home Depot, what we have with Home Depot, that little baby, okay, she's going to hit that down there too. So she's only down 11 cents right now. If we put this up, yeah, she's going to get hit too. Because Home Depot, they both look the exact same. Just Home Depot had the high volume low that hasn't got tested yet at the 106. Then the next leg down gets to about 84. Now Home Depot does have Home Depot's a better looking chart than Lowe's. There's no doubt about that. You put this up. We put this on a monthly basis. Put it on a weekly for you first. Home Depot has more strength, has had more strength, and does have more strength. And Home Depot, that was a rocket ship. That went from $30 in 2011 up to $117, basically about 4 months ago. I do expect you're going to see a pullback on that. But bottom line, that is set up that it does want to basically pull back. United Technologies, UTX, and after this close out here, it's going to be interesting to see. Well, actually, let's pull up CRM right now, because you got CRM, which is Salesforce. Salesforce right now is trading at the 70.13. And what you have with Salesforce is that this was a potential buyout, a rumor for a buyout anyway. That's when it went from 65 to 78. And that's a high volume stake up there. I mean, high volume high up there. So the way this is set up, it's like, hey man, the low of the high volume high is 65. That's the low of the high. The high is 78. But the way that is trading right now, guess what? Looks like to me like, that baby can go to 78 before it's going to go to 65. And we're at 70.21 right now. So this will be intriguing watching this whole thing shake out tonight, because when Salesforce did take out that high, it had volume behind the move. Altera, ALTR, and this was a classic. There's no doubt. I saw that take off again yesterday. Intel's talking with them again, evidently. Bottom line is that, the first time it took off, it went from 34 to 45. Pulled all the way back to 38, got up to 45 again, pulled back to 39 again. Now you're trading at 46.67. You get a couple gaps in it. If you're not in this equity, if you are in the equity, I'd sell it. If you're not in the equity, don't go short the equity. That's the bottom line. Because if you got the juice already from 34 to 45, it's like, hey, take it. See ya. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're going to be coming right back. Dow Industrials right now down 12. Nasdaq's up 5. S&P's a flat. Gold up $3.10 at 12.09. Silver up 3 at 17.10. We're going to be right back.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Nick in Tampa. Hey, Nick, what's going on?
Tom O'Brien, it is an absolute pleasure.
Thanks so much, man. We appreciate you calling.
No problem. Dude, I've been listening to your show for about 2 years now, and it has just been wonderful. I listen to you, Basil, Andy. You guys do an amazing job.
Well, thank you so much. We appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Let's take a look at one of our quotes. This is by Unknown. Expect the best. Believe something is good is going to happen, and it usually will. Market-wise, let's take a look at it out here. We had the Dow Industrials up down 26. NASDAQ up 1. S&P's flat. Gold contract up $3, traded at $1,209 an ounce. Silver up 3 cents at $17.10 an ounce. Platinum up 6 at $1,156 an ounce. Copper down a penny and a half at $2.84 a pound. Light sweet crude up 73 cents at $58.72 a barrel. Bonds. We had the 10-year up 4 ticks, 127.05. 30-year down 17 at 152.15. And King Dollar up 262 ticks at 95.62. The euro down 50 at 111. And the yen up 57, trading at 121.27. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? We got a flat market out here, folks. Third day in a row with a flat market. You had the Fed minutes come out at 2 o'clock, non-event. The SPY is trading at 212.88. We did volume out here today of 73 million. 212.24 would get you back inside the lower range. Bottom line, you get 3 days up here. I don't expect tomorrow anything different. Why? Because you come into the Memorial Day weekend. Everyone's going to be leaving their trading desk tomorrow probably by noon, not Friday. Friday, they're going to be done, okay? This is at the beginning of the summer, particularly Labor Day, people want to be out of here. Particularly what you're going to see is that because it's not that markets haven't been up, they've been sideways for 6 months right now, but they're not down. So they'll be comfortable leaving the desk. You take a look at the 3Qs. 3Qs are traded at 110.01. And what you have with the 110.01, that is trying to get into its high out there. That was generated out there the 27th of April. That high is 111.16. Now, what it did do is this, and this is basically a failure. You got into the low of the high, and you closed below it by 1 penny. That's a failure. That's the bottom line. If we go take a look at the Dow Industrials, the Dow Industrials did fail. The Dow out here got over the highs, closed underneath the highs. We did 688 million shares. That was going into the 800 million. Bottom line is that you closed out at, you're only down 26 points. Subtle, no doubt. You're at 12,285. The high that it had taken out is 12,288. Gold contract. What do we have with gold? Gold wants higher price, folks. We take a look at gold. Gold had gone lower yesterday, had volume, rejected lower price today, had lighter volume. You're going against the strength that was developed on the 11th of May. Bottom line, gold looks like it wants to get up to this 1260 area. Now, in that context, let's go right over and watch King Dollar, because King Dollar looks to me that it has finished its counter-trend bounce. The counter-trend bounce we're talking about is that was the first bounce that King Dollar had since coming off 100. So what we had with King Dollar is this. On the 13th of April, you're at 100.27. You go straight down to 93 3 days ago. Today, what did you do? You got up to 95, 93. You did that with 52,000 contracts versus what you're coming into at 102,000. So I suspect that looks to me like a C point of an ABC structure on the way down. That structure, ABC structure on the way down, can take that right into 88. 88 will just be a crusher, big time. If we go over to the bond market, we take a look at the TLTs. What you're going to have inside the TLT is this. TLT is building cause for lower price. That means that bond prices are going down, yields are going up. TLT has just gone from $138 in January. We're at $118 right now. It's going to take a little more cause to basically break this structure that we're in. The reason being is that if you take a look at where we are right now, there's a nice floor right underneath where we're trading right now. So I don't expect that thing just to blow it away. You'll build some cause at the 116, 118 area to get that down about to the 110. The volume characteristic is absolutely huge, man. The TLT has come down with monster volume, huge volume. So I do expect that you are going to see those lower prices come out. At the beginning of the show, you know, if you saw how I hesitated there, this is what it was. This is, you know, I talked about the banks the last hour, folks. So what you had out here today is that you had 5 of the large multinational banks plead guilty to currency manipulation. And simultaneously, the SEC gave them waivers, because this is the first time that has ever happened, by the way, that they're pleading guilty to felonies, okay? So they're pleading guilty to felonies. They'll pay billions of dollars worth of fines. Then the SEC gave them a waiver that they could still stay in business. But what just happened just now is that the CTFC came out and they released details of what these banks were saying inside the chat rooms, okay? This is so bizarre. You can't make this stuff up. I mean, it's like amazing that the SEC would even give them a waiver. I mean, the manipulation is, you got to Google this, folks, okay? What you have to Google is that you have to Google Barclays traders, okay? Now, what's possible here, this is if I want to give them the benefit of the doubt, right? Why that the SEC would give them a waiver and why that none of these guys are in jail, which they should be, but why they weren't, it looks like from the aspect of these quotes that are out here, this wouldn't be like you and me getting taken to the cleaners. This is other large institutions getting taken to the cleaners. So listen to this one. This is unbelievable. The manipulation. Okay, so this you want to Google it. I can read the whole thing, but it's a lot. But I'll just give you a few quotes out of it. This is insane. The manipulation didn't stop at putting in low fixes. What they used to do is that they put in low fixes. What they did on a continual basis is that they were trying to stop their own clients out of orders. But we are talking about, listen to this. In one example, the CTFC gave, a client had placed a stop order loss, listen to this, to buy 77 million in British pounds at the rate of 95 against the currency. The Barclays trader attempted to get the currency to trade at 97 so he could sell the full 77 million to the client at 96.5. Barclays would split the profit from the stop order loss if the average rate of the British pound in the market was lower than the stop loss order. Here's how it played out according to the CTFC. At 10:30 in the morning. So, yeah, he's talking. Okay, here, well, I'll just go through this. This is crazy. At 10:30 in the morning, you got stops, 80 quid, in reference to the Barclay client above, it was. Primed like a coiled cobra. This is someone talking. Primed like a coiled cobra, concentrating so hard. Made of wax, even blinked. The rate climbs to 86, and the firm X notes, it's higher still. Barclays replies, watch out, we'll be soon. Replied that they did not believe Barclays could trigger the stop loss. Between approximately 10:46 and 10:49, Barclays purchased 66 million at the rate of 78 and 95. Barclays then placed an order to buy 5 million up to 97, which was above the best price offered prevailing in the market at that time, which was 95. The order resulted in Barclays buying 2 million at 95, 3 million at 96 before the rate fell back down. Firm X. I hope that was a one-touch order. It was just about that. A long sum here. Barclays. Firm X told Barclays, we pick up a seller guy I like and just about above the print I need. Okay, I can't go through this whole thing. This just keeps going and going. Bottom line, let me see the bottom line, how much they made. Okay, this is the end result. So this went on for an hour. Firm X, the hell with him. Lots of cursing. You tried to carve him up and eventually succeeded. Carving their own client up for 90, how many million? 77 million. Yeah, pretty sick. This is Tom O'Brien, this is TFNN. You stay right there, folks. Come right back.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they have just released the second running of their 5-year Market Safe Futures Economy CD. This is a CD that could really deliver. but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Let's go over, and first we'll take a look at CRM. You got Salesforce. Salesforce come out with numbers. Salesforce closed out here at the price point of 770.16. That thing is trading up about $3 right now. You're at 72.64. And let's see what CRM has to say. There she is. Okay, so Salesforce raised its sales forecast for fiscal 2016 as large enterprises signed up for the company's products, underscoring its attractiveness as a potential takeout. Revenue for the year through January will be $6.52 billion to $6.55. Their previous outlook had it at 6.4 to 6.5. First quarter sales rose 23% to $1.5 billion. So Salesforce is trading up a couple dollars. What you do have with Salesforce is that you had that spike that was established on the 29th of April. That spike has to do with a rumor that was in the market out here that another company wanted to go after him. That went from 65 to 78. And that 78 is a high volume swing point. So that 68, folks, is going to get tested. That's how that baby shakes out. Williams-Sonoma, which is a WSM. Williams-Sonoma closed at $77.89. That is trading right now at $81.35. We take a look at this one. Let's see what they have to say. Let's see this. Numbers go like this. Williams-Sonoma, the Fort. Okay, so. They reported first quarter net $44.8 million. That was 48 cents a share. The average estimate of 17 analysts was 44 cents. So 44 was the estimate. They came out 48. The seller of home cookware, home furnishings revenue was $1.03 billion. The estimate of 13 analysts was $1.01. Bottom line, that's they get some juice behind them. That is trading at 81 right now, and you're not going to want to buy this. So check this out. This is pretty cool. This is still at highs, but what you're going to see here is this. Williams-Sonoma hit a high of $84.75 March 17th. You came off that high with $3.4 million. It's going to be, tomorrow, it's going to be how do you come back into that area? There's a gap there, folks, and that's what it's going to trade into. The bottom of that gap is 80.62, and right now we are trading at 81.24. So that's going to be pretty wild watching this whole thing shake out. NTAP. We take a look at NTAP. This is Net Appliance. Net Appliance closed out today at $35.33. That is trading at 33.02. Numbers go like this on Net Appliance. They're pushing their dividend up. So this is always going to be interesting. This is an equity that has been in a downdraft. They're pushing their dividend up. Watch, it's going to be amazing if they do a buyback too. So this is an equity that's already gone from $43 down to $35. Let's see what they have to say. Their estimates are below. Oops. 1 second. We'll be right there, folks. Let's see. Okay, so the estimate revenue was $1.46 billion. They're at 1.27. Man, this thing really got smoked, man. This is surprising. So they missed on revenue and they missed their earnings by 7 cents. But going forward, this thing is like insane. They're saying that the next quarter going out, the estimate was supposed to be 59 cents, and they're looking at 20 cents. So if we bring this back, let's put this back on a much larger basis. Take a look at where we are. We're at 32 right now. You're off 46. 32 is going to go after the swing low. Oh man, this is a sick looking stock. So we're going after the November 2012 swing area. That was on the weekly. We put this on a monthly, and yeah, we're going after 26 bucks. This is basically a total breakdown. That's what you have. If you inside the marketplace out here today, folks, where you had some real destruction was inside the transports. The transports themselves, the Dow transports, they funded down, huge volume, taken out a B point with volume. The airlines were the culprit in a huge way. Some of these airlines, folks, were down 6, 8, 10%. The transports themselves were down in an incredible way. You had the you know what's interesting about the transports too? The transports topped out in November of 2014. The high in the transports is $93.10. We're at 85 right now. Now, price-wise, that's not the end of the world. Volume-wise, folks, and price-wise, it is. We just blew apart the whole bottom of the consolidation out here today. I mean, with monster volume, too. You're talking, we did 25. Yeah, we're going to do about 25 million. Well, I'll get it. No, it's 25 million. You're doing 25 million. You're blowing out 16 million. So the way the transports are set up right now, they're going to run down to 7,700, that is, and we're at 85. The airlines, okay, are just a total disaster. You know, United Airlines, it's hard to tell what airline actually started it because the selling was right across the board. You know, United Airlines went from $60 to $54 in a heartbeat. 22 million shares blew out of the stock. And guess where the stock's going, folks? This is what's so sick. October 15th swing low. That October 15th swing low, the notorious October 15th swing low, is out here in spades. I mean, and everything is just going after it. In fact, you know what I looked at yesterday, which was intriguing, because what happens with high volume swing lows is this. As they start getting tested, you'll see, first you see one sector go after it. Then you see some more stocks in the sector go after it. Then the next sector goes after it. Then the next sector. When you're at highs in the S&P, which we are right now, which I've seen this many times, for some reason, the actual indice can hang up there. And underneath, many of these equities have already got killed. Now, if you look at Yahoo, you'll see that the high that was established in Yahoo is 52. Right now we're at 42. Doesn't sound bad, right? But it's 20% off the high. The S&P is at the high. We take a look at this, and you're going to put this on a weekly basis. What you're going to see is that you're going to be kidding me, man. Where's it going? Well, guess what? You had that swing point out there. 40 is the top of the swing, 36 the bottom. It's going right after it. The way Yahoo is trading, you know, it can hold that, but bottom line, chalk it up, baby. This is Tom O'Brien. This is TFNN. You stay right there. We're coming right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Don't forget, TFNN, we broadcast 10 hours a day, every trading day, folks. Get it right on your cell phone, TFNN.mobi. If you'd like to get Tiger TV, just on your cell, go to TFNN.com. On the right-hand side, you see that little box with mobile devices. You hit that. Servers will understand what type of device you're on, deliver that Tiger TV right to your phone or device or whatever you are actually on. Now, let's go over and we take a look at the XLF. So we're going to go through the some of these ETF structures inside the sectors out here. So if we take a look at the XLF, it's crawling. It's crawling up to its highs. It's trying to get into those highs. Haven't had a tough time basically to do it. The high in the XLF is 25.14 or 24.91. We hit 25.04 today and basically gave it up. Now, it not only gave it up, you know, you start coming back with some juice, which this market hasn't had any juice. The remarkable thing about it is that for the amount of scandals that have been out there inside the large banking structures, it's amazing that it is up there at all. The thing that's intriguing, too, you know, when I really look at all this news that's coming across on the amount of where the prosecutors are going with these large banking deals, it's like the monsters out here. And this is like the whole deal about, you know, too big to fail. They're too big to prosecute. They're too big to do anything. I mean, and it's pretty amazing, you know, because the banks out here today was Citigroup, JP Morgan Chase, Credit Suisse, BNP Paribas. 1, 2, 3, 4. That's only 4. There was 5 banks that pleaded guilty. So now that two of the biggest, so here it is. Now that 2 of the biggest U.S. banks are convicted felons, the Justice Department appears to have proven the point it set out to make a year ago, that it could deliver the harshest penalty possible against financial institution without inflicting fatal wounds. I don't understand why you wouldn't want a fatal wound. Could you imagine? Anyway, okay, maybe a tough act to follow. The criminal admissions by 5 banks, including Citigroup, JP Morgan Chase, on top of the 2 extracted last year by Credit Suisse and BNP Paribas, barely registered in the markets. Exactly, where investors were primed for the news. The Securities and Exchange Commission helped ensure the pleas wouldn't hurt banks' business, deciding late yesterday, Tuesday, according to a person familiar with the vote, to give the banks the permission they needed in order to keep managing mutual funds and issuing certain securities. The idea that felon banks could be welcomed back to society after writing a check but spending no time in the penalty box could end up backfiring on the Justice Department, according to some academics and former prosecutors. Now that it's clear that a guilty plea's damage can be mitigated, they reason it may be harder for prosecutors to hold the threat of prosecution over the banks' heads in the future to address wrongdoing. Oh, that's a trip, there's no doubt. The extreme scenario, while unlikely, is that a bank could attempt to call Justice Department's bluff by threatening to enlist a legion of lawyers to battle the department's accusation in court, some of the people said. At the end of the road, you have normalized criminal activity, and someday someone's going to say, I'm going to take you on, said Arthur Wilmarth, professor of Georgetown University School of Law. A bank could be cornered into such a move if they are unable to continue to get permission from the SEC or the regulators to keep doing business, according to one person familiar with the argument. Unlike widget makers, whose customers are allowed to keep buying a widget with competitive quality and price, banks keep customers and employees in part by selling not tangible products but trust and integrity. It's possible that banks without a rap sheet could eventually attract customers and employees from felony-tinged rivals. I doubt it. I mean, there's no doubt that all of us have got used to the aspect. First, you had the aspect that they do whatever they want to do. They pay large fines, and it's part of doing business. Now what we're going to see is that the JP Morgans of the world, the Barclays of the world, the Citigroups of the world, that are really all over the world, they basically write the rules. That's what it comes down to, you know. And they get away with it. The thing that blows my mind is that how did we get to this spot that it can be just normal? And it's just that's only part of it. And then you have the other spot that someone steals a slice of pizza and goes to jail. It's intense. Okay, so that's the XLF. Now let's go to the XLE. Let's go to the energy business. Energy business out here, it looks like the oil market is ready to turn south again. Why? Because the XLE can't get out of its way. The XLE itself has come off a high of $100. We're at 80 right now. What it also has, though, is this. The bottom of the consolidation that we're in the XLE has monster volume. So it looks like it's a large ABC structure on the way down. The lows will get tested. Now, the lows of this consolidation are 72, and we're trading at 79. If, in fact, it breaks, this is a monster ABC down, because 101 is the A, 72 is the B. You know, so you're dealing with 28 points. Your C is 83. So that's a monster. You're talking about a 55 price target if you break the B point and we have juice on it. Now, what we have hanging out here at 54, this is like really crazy, is what? You get a high volume swing point. This is really nuts, actually. But that's what you have. This thing has been hanging out here for quite a while. Oh, man, this is... So, you know, I talk about the October high volume swing point. What has happened in the oil market is that the October high volume swing point of 77.51, the energy business blew it away. So watch what happened, folks. The whole market in general has this high volume swing point. in October. The XLE had it. The high of that was 84 and the low was 80. It was 77. It came down there. Then what it did, XLE goes topside again for 7 weeks. It goes from a price point of that 77, gets all the way up to almost 90, 89.22. Then what does it do? It comes down with a vengeance and actually takes the high volume swing point out with higher volume. That's what's really bizarre, okay? It did 266 million versus, oh, okay, it didn't. 266 million shares versus 270 million shares on the weekly. Bottom line, it's way below that now again, and it wants to go after now the high volume swing point from October of 2011. That high volume swing point is 66 to 62. Now, if we go over to the SPY for a second, because you have to wrap your head around this. If you're in the marketplace, all the transport stocks, they're down there now. They're going after it. Google already went after it. Yahoo is at it. The S&P is going there, folks, okay? So what you want to do, if you're in an S&P fund, get it, just put a stop in. That's the bottom line. You call up your broker-dealer, your financial advisor, whatever it is, put a stop in. Nothing's going to hurt you. The stop's not going to hurt you. What will hurt you is this. If we bring up the SPY and we put this on a weekly basis, and if you want to just see where we are in the context of where that October 15 swing low is, we're at 212. Well, that October 15 swing low is, the high of the low is 187 and the low is 181. So you're down 30 bucks. Now, 30 bucks is not the end of the world. It's 15%. Question is, will it stop there? My take goes like this. Because we haven't had a correction, and I'm going to bring this up so you can see exactly how long this is. When I bring this SPY up, what you're going to see is that you can go back to 2011, and we're 2015. The SPY at 2011 was 100. We're at 212. This market hasn't corrected. So what normally happens when a market doesn't correct, when you get a small correction, people think that they can take a small correction. A small correction would only be like 10 to 15%. In 1994, in fact, I'm going to bring this up. I'm going to put this on a different thing because I want to show you what happened in 1994. We had somewhat of a market rally, but not as long. It ran for about a year and a half straight. And then we came into about a 15% correction. Folks were almost jumping out windows, folks. I mean, it was like insane. And the amount of wipeouts, total wipeouts, was incredible. And the reason that it was so intense is because everyone was leveraged up so much. It wasn't that it was 15%. It was the aspect of how the correction came in. You stay right there. As soon as we come back, I'm going to have this chart up for you. This is Tom O'Brien. This is TFNN. Dow Industrials closed down 20. NASDAQ was up 1. S&Ps were flat. We're going to be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick or tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. And yeah, so I'll go over a few of these stocks just to see how bizarre this is, folks. And it has to do with not having a correction for long periods of time. And then you have a correction, and the correction lasts longer than 3 or 4 days, because that's all we've had thus far. What you're going to see is this. The first one I'm going to pull up is IBM. And when you see how small this is, it'll blow your mind. But IBM, okay, at the beginning of that correction. So what you had is this, is that the 1993, 1992, I'll put it 92 to 96. So It was in 94, I believe. Here it is right here, 1992 to 1994. Because this was always blowing my mind, because I knew at the time that this wasn't a big deal, big correction, but because of the way the people in the market reacted, it was just absolutely insane. So what you had is this. In 94, Big Blue, okay, so IBM, yeah, it was the spring of 94. Big Blue is trading at $15. Imagine $15, right? It goes from $15 and it goes down to $12.80. People going crazy. It's like the end of the world. We'll go look at ExxonMobil, XOM, and you'll see what I'm talking about. And I suspect this is going to play out the same way, meaning because we haven't had a correction in so long, what you'll see is that when we do have a correction, it can be a tiny correction percentage-wise, but people are going to get hurt. So ExxonMobil, what did Exxon do? Exxon went from $16.59 down to $14.09. So percentage-wise, what is that? That's about 15%. Percentage-wise, you can see it was, all in all, it was only a 15% correction. What it did, now this is what got people out of the marketplace. The correction had started in March. I think it was March. Okay, start slowly. It got some acceleration in April. It got bigger acceleration in June. And then it kind of did a counter trend bounce, and then just went south and went south very quickly, September and October. That's when people really start, well, a lot of people got out of the market in June. You did a counter trend bounce. I'm not sure whether people bought back in or not. I wasn't attuned as well as I am now, that's for sure. But then the market took them south again. What I was attuned to in a huge way is that it didn't matter where you went in September and October of 1994, people felt that it was the end of the world. And that correction was only 15%. You know, so now I'm going to go back to the SPY. And all this is about, folks, is getting stops in. If you go back to the SPY, you're at 212. The high volume spike low out here that it will go after. Now, it doesn't have to go to the low. It will go to the high. It's 187. The low is 181. You're talking 20%. You're talking, yeah, it's talking 20%. You get 20, 32. Yeah, you're talking 20%. No, you're talking 15% from where we are right now. 15% down. The transports, we go back to the transports and this came out of the blue, by the way. You know, I'm not quite sure why they got hit so hard today. I mean, they've been coming down. United Airlines came down 12% today. You know, the highs on the airlines, $74 was United. Today it did 22 million shares. 22 million. They just unloaded this thing like beyond belief. Monster ABC down. So what you're going to have, one day, you know, just brought us back to October of 2014. We're only at the top of October 2014, however. The high volume spike low is down there at $44 and you're at 54 right now. What it has done is this. You're coming into the highs of the lows of that October 15th swing area with monster volume. I suspect more than likely it'll get to the top of it. The top of it's 45. And I suspect you're going to get to way too much volume. Once you get that croaked, that'll go sideways for a while. Bottom line, it's a monster heads up. Let's go over and we take a look at the commercial real estate market. We'll do that through the IYR. IYR, that is hanging out here at 76.34. SPG happens to be the largest weighting structure inside it. This is Simon Property, and we've talked about this before. This is different than retail, and it's really important to wrap your head around how commercial real estate works. And commercial real estate works about everything going forward, everything selling a forward interest rate. That's what they're selling. And with rates going higher, whether it's 1% rate, makes a huge difference. Why? When they're involved in projects, what they've been doing for the last 34 years, as you sell rates going forward, the market has always saved them, because the bond market has been the biggest bull market that I've ever seen in my lifetime. You know, it started in 1981. Rates were 14, 1970, no, 81. Yeah, rates of 14%. Rates get down to zero. Well, we know rates have gone negative in Europe. They're not negative here. In Europe now, they basically are turning around. But if we stay with the IYR for a second, what you're going to see is this. The IYR is off the high of 83. We're at 76. You get monster volume down at 73. I suspect what you're going to see out here when we put this on a monthly basis is that they're going to see this thing go after 61. That's how this is set up right now. And 61 is indicating that we are going to see an uptick in the rate structure going forward. Right now, we're still at 2.2 on the 10-year. If you want to basically get a mortgage out here, folks, go get it right now. If you want to refinance, do it right now. I don't see rates, by the way, going up heavily, but why pay even 1 more percent? Percentage-wise, they are going to go up pretty heavily because what you do have, of course, is that when you're at such a low rate, meaning the 2-year right now is at 0.58. Well, when you're at 1, that's almost a 100% move. So yeah, percentage-wise, it's going to be big. The 5-year rate right now is 1.551. When that gets to even what? 2, what is that? That's a 33% move. That's why you see inside the commercial real estate, that is a big deal. That really won't be as big a deal for you and I. It will be a big deal, though, for interest-sensitive equities that you do own. And if you own a bond fund, folks, get out of it. Get out of a bond fund. If you own treasuries, you don't have to get out of treasuries. You're going to get your money back. You're going to get exactly what you bought in for. It's different. You have the piece of paper. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, fly with it. Thanks for being here, folks. Have a great night, safe night. Look forward to speaking it right here tomorrow. Go get them, folks.